Welcome to this week's IMEX FinTech Weekly Report, which is an overview of last week, a preview of what's to come next week, macro outlook, a trading tip, and also plenty of chart analysis. First of all, our disclaimer. So obviously trading does involve the potential risk of loss of capital. It's not suitable for everyone, as I always say, but I hope it is for you. And as many companies provide leverage, just be careful because you could lose substantially more than your initial investment. Any views, opinions, everything that's contained in this is provided solely for educational purposes, just to give you a little bit of insight into what's going on in the markets, what's been happening in the markets. It does not constitute investment advice, and we're not encouraging you to trade or invest. That has to be your decision. And of course, you should carefully consider the risks, your financial situation, level of experience for sure, and risk appetite. And of course, you should only risk capital that you are prepared, but more importantly, can afford to lose. Any doubts whatsoever, seek independent financial advice before you risk your capital. Okay, so let's take a look back at last week. Of course, the key was, the big one was the FOMC. The Fed hiked as expected by 75 basis points. Further rises are going to be based on data. There's no acceleration of reducing their balance sheet, which is a shame because that's something that they should really be doing faster. GDP contracted. There's arguments that technically it puts the US in a recession, but it's not in a real recession. The data's too strong for it to be that. Russia turned on the gas tap to Europe briefly midweek, which was then flowing at 40%, only to cut it in half, so it's only flowing at 20% at the moment. And of course, that gave another little boost to oil. Musk is countersuing Twitter. Of course, you remember that's all still ongoing. In fact, he wanted to buy the company and then changed his mind. The dollar weakened slightly. Dollar weakening again. This data that's coming out. How far are the Fed going to go with these rate increases? Now, the stocks rallied, which is interesting because they rallied on the bad news. Now, it's one of those situations where bad news could potentially be seen as good news, especially for stocks, because it means that maybe the Fed will cut back and just hold off a little bit from their future meetings and not be as aggressive with their rate hikes. And the stocks basically had the best performance over the last 7 weeks. Oil sticky around 100, it drops down to 90, it makes up to 103, 105. But it's just sort of sticky around $100 at the moment. It's waiting for some guidance. Now, gold performed better. The best, in fact, for 3 weeks. Closed around about 1764. So my call options are looking very nice now, and they're well in the money. But just keep an eye on it. I'm not saying that it's just going to keep going and going for the moment. But again, where we usually have that inverse relationship between gold and stocks, they seem to be tracking each other a little bit at the moment. Bitcoin remains steady. Again, it's partly tracking what the stocks do, and the stocks have been stronger. And confidence does seem to be returning just a little bit to crypto for the moment. ETH has had a good time as well, obviously, because of some of the fundamentals that are going on with that. When we look at this week's data in the US, Friday, of course, we've got NFP coming out. I look more at the earnings and the hours, the unemployment rate, and the jobs to unemployed ratio as well. That for me, they've sort of got more insight, especially for inflation and such like. Other data coming out is manufacturing, PMI, factory orders, jobless claims, consumer credit. Consumer credit, are people having to borrow more to just live effectively, buy food and fuel and such like? Now, jobless claims, it was big once COVID hit, and then sort of earlier this year, people stopped taking any notice of it. But just keep an eye on it because it's starting to just increase week on week at the moment. So that might come back into play at some stage. And it is going to help us to sort of assess the state of the US economy. Bank of England, they got their rate decision this week. There's less room for them to increase just purely because we've got a weak economy. I'm based in the UK, and the political outlook. At the moment we're still trying to replace our Prime Minister, and the voting won't finish until the 5th of September when the new Prime Minister will be announced. In the EU, not too much coming out. The employment rate, PMI, and industrial production. Again, industrial production is that being impacted by the war. Australia has a rate decision this week as well. Remember last time they were very aggressive. This time we're looking potentially at 50 basis points. And maybe that's just because CPI was slightly lower. So it may just make them take a little step back. They're still going to look as though they want to put rates up. But again, central banks have been so aggressive that they may decide that they need to slow down a little bit now. And this along with their transparency, etc., is things that I covered a couple of weeks ago in YouTube for Fineco Bank. It was a webinar, so I mean, if you check it out on the internet, you'll see a lot more insight into what I covered. I'm talking about central banks in general there. And China and Japan have got PMI data as well. Moving on to the macro outlook, inflation is obviously still very much in everybody's minds. It looks as though it's possibly peaking in certain countries. The price of raw materials have come down, but the companies are holding on to those higher prices and taking the higher profits until they see the demand drop, and then they will lower their prices. In the UK, it could be October or even January next year before we see inflation peak. And that is because we've got these energy caps on for the amount that we're being charged for our electricity. And the next rise in that is in October, and then I believe there's another one in January. We're still seeing shrinkflation, potential for stagflation, and recession is becoming more and more of a topic. Supply chain issues are still there. They are easing slightly though, but China still has their lockdowns, and of course, and until they're back to full capacity, we're still going to see some of those supply chain issues. And of course, there's such a backlog. How quick can we recover from them? Something else to bear in mind now, COVID cases are rising again. Obviously, the Russian invasion of Ukraine is still ongoing. It seems a little bit of a sort of a stalemate at the moment. Ukraine sort of manages to sort of get a little bit of their territory back. Russia's establishing themselves along the border to Russia and sort of holding on to those. And they're even talking about holding elections there. Energy and food inflation is still with us. It's just, as I say, just seems to have just peaked for the moment. But of course, in Europe, gas supplies are a massive issue. We're in the summer period at the moment. Are they going to be able to fill their supplies and stock up for the winter? It's very doubtful. And some things like energy are just so difficult to replace overnight. It takes time to do all of this. And of course, Putin can decide if he wants to supply Europe or not. There's a lack of workers still. Earning pressure is still there. I do expect to see that start to ease, though. I think there's going to be less jobs available. And I think some of the people that have taken time out now realise that they perhaps should get back to work. And, some countries seem to be heading for recession. Whether it's going to be this year or next year will depend a lot on how aggressive the central banks are. Looking forward a little bit, the next Fed meeting now is in September, and before that we're going to get two sets of data around employment, around inflation, and of course the Jackson Hole Symposium, which is on the 25th to the 27th, where all the economists and the central bankers and all that all meet to have discussions on the outlooks of the economy, etc. So again, it's always worth looking at once they've released and they have their speeches of what went on there, what was discussed, and the results of that. Trading tip of the week, how to get started in trading. Now, a lot of people or a lot of you guys may already be trading, but some possibly not. So retail, they go into spread betting, they trade CFDs, but, futures and options are available as well with a lot of brokers. And futures and options, especially the futures these days, they've got the micro contracts, so it's not as expensive as you think it is to trade them. And asset classes, of course, and again, it's important to find out which asset class is best for you and then which product. So we've got the financial, the commodity, even the digital assets, we've got the crypto, stable coins, and of course, we've got NFTs now, and we've got the metaverse. So there's plenty to look at there. But again, make sure you do your homework before you do any investing. And of course, it's always best to use a demo and sort of hone your trading skills. Make sure you can prove to yourself that you can make money at trading. And of course, even make money on a demo doesn't guarantee you're going to make money when you go live because of all those emotions that start to flow. Now, courses, yes, of course I'm going to promote courses because that's part of what we do. We do it, one, to educate people about trading. The other reason we do it is to find traders. We have got our own prop desk at Cymax, so we're always looking for those traders that are very sort of got high potential. And of course, understand the fundamentals that drive the markets. That's so important. And then, of course, you need that risk management, technical analysis, different trading techniques that are possible. I've got almost 50 years of trading experience. So for me, I adapt to the market conditions, and it's important that you can do that as well. A trading plan, because that trading plan is going to give you consistency. And trading psychology, how to manage your emotions, different techniques that you can use to do that. And just to point out, if you're in the UK especially, I'm going to hold some seminars in London on the 9th and the 11th about all of these subjects. It's going to be live. I'm going to be there actually in person. You come and meet me and chat to me about the markets. I'm more than happy to do that. It'll be a pleasure to welcome you there. And for those that can't attend personally in London, what I'm doing is on the 10th, I'm repeating the webinar on the 10th. So I'm holding two, one in the morning, one in the afternoon. So I will hold them over Zoom. So if you can't make it, then you're not going to miss out. So just contact us at info@cymexfintech.com. Details are on the last slide anyway, but just reach out and I'll book you a place. Okay, now we're going to do our normal weekly analysis. So again, just a reminder of the legend in case you're not sure, this is the first time tuning into these. The black numbers are, where we've got support and resistance levels, trend lines, etc. It's giving you those prices. A brown number indicates a breakout level unless it's the brown pivot point, of course. And you can tell the difference because the brown breakout ones will be the full width of the chart. Any claret numbers on there, all of the ones down the right hand side, they are just providing horizontal levels that are going to be based on 2 or 3 tops or bottoms that I've discovered. And then the Fibonacci colors, again, are on the right hand side. Of course, the golden ratio is the most important for that, which is like the lime green one out of the 3. You've got the blue, the red, and the lime green. Okay, so moving on. So the Dow, stocks overall ended July steady. They were boosted by the fact that the Fed may slow down their rate increases. So we have seen some good recovering from the lows over the last few weeks. And then when we look here, I've identified support and resistance. It sort of could go sideways for a few days, but it's going to have a breakout by the looks of things. Not sure which way yet, obviously. And then there's that line, that claret line above, which has been there for a long time now, which is indicating sort of where the real resistance is if the market can break on the upside. With the Dow Jones still on here, 30-minute chart. I've got the pivot points on, all the 30 minutes I've put the pivot points on for. Again, you can just see we're coming for that breakout. It's sort of on Friday, it stayed above the pivot. It went up, tested the R1 level late Friday afternoon. It was the end of the month as well, and it just sort of closed around there. Moving on to the S&P, again I've identified a couple of resistance levels there and a support level on the daily. Just make a note of those levels. And then moving on to the 30-minute, again I've identified some levels there, support resistance trends, also the pivot levels. The best thing when I'm going through this, if you can't write these down fast enough, is just take a picture on your camera and then you can go back to them afterwards, or just replay it, obviously, but just save you maybe a little bit of time. Nasdaq daily. So again, some resistance levels higher up with a couple of support levels below the market as well. And then the 30 minutes pretty much the same as the rest. The Nasdaq did come down and test the pivot point level though, was rejected and just closed steady, as did all of them. And then we move on to the Russell 2000 support level there, some resistance levels above on double and triple tops. So it'd be interesting to see what goes on. Just remember, the Russell is made up of the small and mid-cap companies, obviously Nasdaq's tech companies. So, it just depends what you're trading or how you want to trade. And again, although they track each other, they can move at different speeds sometimes. Some lag a little. So just really sort of what market's going to suit you the best. Again, here, the 30-minute. So the Russell just sort of traded between the pivot and R1 for the whole day. Moving on to currencies. So here's the pound against the dollar, which was, performed well on Friday. But if you look at it, it's closed with a doji. It did get all the way up to above sort of 22.5, almost to 23, but it failed there. And you've got that support line in there at the moment. I just can't get bullish for the pound or the euro at the moment, really, just because of what's going on in Russia with energy prices and such like. So here's the 30-minute. It had a good move on Friday, actually, the pound against the dollar. Because look at that. Early on, it started around the pivot. It rallied all the way up to R2, rejected there, then came all the way down to test S2, which is great. Some amazing opportunities there, and then settled just above the pivot. The euro is sort of managing to find a little bit of support at the moment. It is more a little bit of dollar weakness that came in last week, I would say, rather than a strength of the euro. And we're just holding in this sort of range at the moment. It's struggling to get through that 103. So let's see how the beginning of the week goes. Friday, otherwise, I'm pretty sure we're going to have a fresh direction, whether it's up or down for the euro against the dollar. Here's the 30-minute. So again, got a couple of resistance levels on there and a couple of support levels as well for you. Moving on to Bitcoin. So Bitcoin had a better week, a steady week. It's finding some support now, a little bit of confidence coming back in for the moment. And again, just remember, it is loosely tracking what's going on with the stocks as well. So with the stocks going up, it's a good thing. I would say at the moment, as you can see that line, the 27,345 is, it's got to get past there. That's where the gap formed. And it's got to get past there to become anywhere near bullish. And then after that, it's probably got to get through about 32,500 before, you're really going to see buyers sort of saying, oh, winter's over, shall we say. But let's wait and see there. But, again, I like to see the crypto improving. I hold a little bit of crypto, but not so much these days because I transferred a lot of my interest into NFTs and the metaverse. But it's still good. I've still got an interest in it for sure, and ETH as well. And so here on the 30-minute, we've managed to get a resistance line in there, got a support line in, and as you can see, Bitcoin pretty much during the day also traded between the pivot and R1. But as I mentioned, sort of Bitcoin is tracking the stacks. It is a loose connection. It's not a pure correlation, tick for tick or pip for pip for sure. But if you look, you can just see that they are that almost mirror image. It's not perfect, so don't think it is. But overall, they are moving in tandem. Here's the gold daily. Again, gold had a better week last week. It did find some support. The buyers came back in. Is it undervalued? Personally, I'm long call options, so I'm long the right to be long of the market lower down. So I'm happy to see it up there for sure. How much further it's going to get, I am not too sure. It's going to start to find a little bit of resistance. And of course, that relationship with stocks, is it going to come back or are they just going to keep going together for the moment? Again, whatever happens, Friday is going to be the decider for pretty much all contracts, where they're going to go once we get that data out. So here's gold in 30 minutes. I've got it in an uptrend. Again, it sort of it stayed above the pivot all day, and it got quite sticky round about R1. So it sort of got above it, couldn't hold it. It came all the way down again, and then later in the day it got back up there, and it sort of pretty much closed just above R1. Finally, oil, WTI. So here, managed to get a couple of support levels a bit lower down and a resistance level above. As I say, it just seems to be a bit sticky around about 100. It doesn't mean it's not going to move away from 100, but it seems to sort of try and rally, struggles, then tries to sell off, struggles. But I think, really at the moment, it's the fundamentals that's driving it, and to a degree, what's going on with oil. And obviously that's relating to what's going on with the gas market. So they're sort of they're linked together at the moment to a certain amount. And here we can see that it did have that rally. It got above 101, which was R2, couldn't hold it, and then came all the way back through again and pretty much come back to the pivot point itself. So all I can do is just say I hope you've enjoyed that. I'm just going to point out some of our services that we provide in case you're interested. Now, we have this daily newsletter which gives you fresh chart levels every day, including new pivot points. If you want to subscribe to that, it's free, and there's the details for that. And of course, we do workshops, one-day workshops, half-day workshops. We do courses, one-week courses. Our masterclass is 4 weeks, but it doesn't all have to be taken at once. And they will take you from sort of starter or even with a bit of experience and really accelerate your learning for you, helping you to make those high probability decisions with your trading. And there's the calendar for that. Again, you can always just reach out to me if you want more information or even have a discussion about your trading. I can certainly provide you with some insight. Trader mentoring, consulting, also providing education, trader education content. We do that to exchanges, to brokers, a variety of different people and companies, and consulting even to companies to help them with their hedging and such like. So, you know, we have very sort of diversified. If it's anything to do with trading, we're on it. Contact us is info@cymaxfintech.com. Don't forget, I've got those live seminars coming up in a couple of weeks if you're interested. And my email, if you've got any questions or anything you'd like to come back to us or to me personally with, is chris.tubby@cymax-int.com. Have a great week. You know, just keep your eye for NFP and what's leading up to that as we go through the week. We've got manufacturing out as well, so there's other bits of news to watch for. But be lucky, and hope to see you next week for another one of these. Bye for now.